Welcome to the Ryun Givens & Company Tax Blog. I'm Curt Brand. Each week we will look at an area of taxation to provide you with knowledge and help you plan for the future. Today and next week we will continue to look at year-end tax planning as it relates to purchases of equipment. An expanding and strengthening economy may mean that December 31, 2013 will be the end of the line for some stimulus-type tax breaks. Last week we talked about how this affects Code Section 179 expensing limits. This week we will look at bonus depreciation for 2013. Under current law, a 50% bonus first-year depreciation allowance applies to qualified property acquired and placed in service after December 31, 2011 and before January 1, 2014. In general, an asset purchased in 2013 qualifies for the bonus depreciation allowance if it falls into one of the following categories: property to which the modified accelerated cost recovery system or maker's rules apply with a recovery period of 20 years or less, computer software other than computer software covered by the amortization of goodwill and other intangibles rules of Code Section 197, qualified leasehold improvement property, or certain water utility property. It is placed in service by the taxpayer before January 1, 2014, and its original use commences with the taxpayer. This could be the last year for extra generous luxury auto depreciation limits. If bonus first-year depreciation deductions come to an end at the close of 2013, so will the extra generous first-year dollar limits on autos, light trucks, and vans, subject to the luxury auto rules. The first-year depreciation deduction for new vehicles that qualify for bonus depreciation is $8,000 more than the first-year depreciation limit that would otherwise apply. For new vehicles bought and placed in service in 2013 and that qualify for bonus first-year depreciation, the boosted first-year dollar limit is $11,160 for autos and $11,360 for light trucks or vans. However, under current law, these boosted dollar amounts apply only for vehicles bought and placed in service before 2014. As a result, taxpayers thinking of buying a new auto, light truck, or van for trade or business use should buy the vehicle and place it in service this year in order to lock in maximum first-year deductions. Next week, we will take a look at the possible disappearance of the 15-year write-off and special expensing allowance for qualified leasehold improvement property, retail improvements, and restaurant property. If you would like to discuss how these issues affect you and your tax situation, please email us or call us at the number on the screen.